Hello, and thank everybody for joining us today. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. They're going to give you a really quick interest rate update on how it's going to potentially affect you for the AT&T lump sum calculations in 2023. We actually got the release this morning of the Pension Protection Act segment rates for September, which means we're about 2 months shy of the November interest rates. We won't get those until December, but it gives us a good idea as to where we're going and how we'll see these pension lump sums affected for 2023. And unfortunately, it was a severe jump from August to September. We'll get into that information in just a moment. But to remind everybody, again, the Retirement Group, we are an independent financial advisory firm. We focus on working with corporate employees. We've been actually working with AT&T employees for about 30 years, helping them transition into retirement. Even though we've been doing that for quite some time, we are not endorsed nor are we employed by AT&T. But again, we've done so much work with AT&T employees. We've got a deep understanding of your pension plan, your 401k, healthcare, retiree medical benefits, things like that. So any questions you have, feel free to give us a call. We'll be happy to help you out. And we do have offices throughout the country, so rest assured if you want to sit down with one of us face-to-face, we can still possibly accommodate that. But obviously this day and age, a lot of information can be covered via web meetings, phone calls, emails, especially with the time constraints of what's going on right now at the end of the year if you're trying to make a decision on retirement or staying on. One of the best ways to actually help with that decision process after we go through the interest rate update will be to run a cash flow analysis. If you haven't done one already, it's definitely recommended to do one that's complimentary. Even if we ran one for you last year, a lot has changed, so it's good to update that as well. But this is a way to actually show you where you stand, not just now, but how your future looks and how things can play out in the next 10, 20, 30, 40 years as well, and help you weigh the pros and cons of different decisions as far as when to retire. Do I take the lump sum? Do I take the annuity? Do I take the lump sum and convert it to an annuity? There's a lot of different choices to look at, and we can go through all of that with you as well. But the thing that everybody's concerned about right now is going to be the interest rates and how is that affecting my pension lump sum calculation should I decide to take the lump sum. Now keep in mind this is only going to affect you based upon that conversion of the single life annuity to the lump sum. So if you're in the cash balance plan, this is not going to affect you. If you're taking the annuity, it's not going to affect you. If you have questions or need to run into those calculations, let us know. We can walk you through how to find that and go through your exact calculations and show you how much you could potentially be losing by staying on next year. But generally speaking, the drop in the lump sum is quite severe. So anybody that's thinking about retiring and was saying that they're going to take the lump sum and retire this year or next year or in the next 2 years, it's definitely important to review this because it may make sense to go sooner rather than later. But ultimately, if you're going to be working longer, then it may make sense to stay on longer as well. And the best way to review all that is that cash flow analysis, like we said. But let's take a look at the seesaw here at the top. So just to give you a quick review, when interest rates change, there's an inverse relationship to what you're going to see in that lump sum. The way it's actually calculated is they use the interest rates and look at your single life annuity and your life expectancy to determine what that net present value calculation is. So when interest rates are lower, they have to give you more of a lump sum, so kind of like a mortgage. When interest rates are higher, they don't have to give you quite as much. So what we saw in the past was interest rates going down, which was driving up the lump sum, and we knew interest rates were going to start coming up. Now, did we think they were going to come up this high and this quickly? No. But what's happened is we've seen those interest rates rise dramatically, so we're seeing the drop in those lump sums now for 2023. Now, AT&T is unique compared to a lot of other companies. A lot of other companies update their pension rates either monthly or quarterly, but AT&T and some others do it just once per year, and they use the interest rates for November to determine what it's going to be for the next year. So right now in 2022, we're basing it off of the November 2021 interest rates, which were still pretty low because we're still coming out of the pandemic. Now we won't know for certain until late December what the interest rates will be for this November, which dictates next year. However, like I said, we did get the interest rates today for September. That's just 2 months shy, so we have a better idea as we get closer as to what those rates could be. And unfortunately, they jumped quite a bit. We actually looked at the interest rates kind of capping out in June. They came down a little bit in July and August, and they shot back up here in September. So what do those interest rates mean to you? So what happens is they use the segment rates, which are 3 different segments. There's the first, second, and third. The first segment is going to correlate to the first 5 years of retirement. Second segment is going to be for years 6 through 20. And the third segment is going to be for years 21 and beyond. So for most of us, that second segment covers a large chunk of retirement, so it's got a higher weighting with that 15 years. But let's take a look at how these have actually changed over time. Let me zoom out here so we get everything in the picture. But if we look at this right now, The November interest rates for last year, 2021, is what we're using for 2022 this year. And those segments, that first one was 1.02%, second 2.72, and the third 3.08%. Now, if we go down to the bottom here and look at September right now, we've jumped all the way to 4.48, 5.26%, and 5.07%. So that's a change of 3.46, 2.54, and 1.99%. Those are huge changes. We've never seen this in the history of the Pension Protection Act segment rates. But like I said, that interest rate, when it changes and it goes up, it's going to drop your lump sum. So go back to that seesaw. Usually about a 1% change equals anywhere from about an 8 to 12% change in your lump sum, depending upon your age. The younger you are, the more severe it is. The older you are, the less severe. But let's just use a quick calculation and assume that 1% equals 10%. So in this case, we're looking at that second segment moving up by 2.54%. So let's just say 2.5%. That means we're seeing probably about a 25% drop in your pension lump sum from 2022 to 2023. So that can be, quite severe. If you've got a $1 million lump sum, that could be dropping by up to $250,000, maybe more, depending upon your age. If it's a $500,000 lump sum, it could drop by $125,000. So even if you're a higher income earner, chances are you could be wiping out 1 year of income or possibly more. So if you're looking at taking that lump sum, your break even may be having to work 13, 14, 16 months or something like that just to get back to where that is. But again, the best way to review this is looking at that cash flow analysis and looking at the options of whether you stay on longer or whether you leave now and look at full retirement or look at other job options. We can go through all those different scenarios with you. The other thing to kind of be aware of, and we can go through this on the cash flow analysis, is we're in a pretty unique sweet spot right now because those interest rates have risen so much. It's actually rising the rates on outside annuities, single premium immediate annuities. So if you wanted to actually look at taking your lump sum and annuitizing it yourself, you might be able to get a better rate or a better income than what you see on the annuity through the pension website. So again, all those are things we can compare and review for you. Whenever you have a chance, just give us a call. We'll be happy to go through that. But again, to reiterate, if you're taking the pension as an annuity, these interest rates do not have an effect on you. And on the cash balance plan, the interest rates are actually a positive because it's driving up those interest credits for you as well. But again, all this, like I mentioned, like I said, this is the biggest drop we've ever seen. We're seeing a lot of people leave AT&T. We've heard that AT&T is waiting to see, what happens with this to determine any changes next year. But it's really important to actually review your situation because we're seeing a lot of people jumping ship when they maybe shouldn't, and then others that are staying on when maybe it might make more sense to retire a year earlier or so. But the best way to run that is that cash flow analysis. We can run various situations for you, show you side by side what it looks like retiring now versus later, retiring now and taking another job, taking the annuity versus a lump sum. Go through all those different options with you to make sure you at least have the ammunition you need to make an educated decision financially. And then obviously it's up to you emotionally if you're ready to retire or not. But again, everybody's different, so give us a call and we can run through this scenario with you to see what your specific situation is. And if you do want to reach us, just call us at 1-800-900-5867. You can also email us at info@theretirementgroup.com. And if you got your cell phone handy, you want to go that route, you can actually hold it up. We got 2 QR codes here on the screen. One would be to set an appointment with myself or one of the other advisors in the offices across America. Or if you want to follow us on our LinkedIn page specific to AT&T employees. That way you'll get updates on these interest rates, updates on AT&T changes that happen from time to time, and you'll stay up to date as best as possible. Again, I want to thank everybody for joining us, but again, I want to remind you, even though we've worked with AT&T for about 30 years or so, we are not employed by nor are we endorsed by them. We've got a great understanding of everything, can walk you through this just to at least let you know where you stand on your various choices. So again, when you have time, give us a call at 1-800-900-5867. Thank you very much and have a great day.